This episode is brought to you by Hasa. Liquid is clearly better. Liquid chlorine is the highest purity, works immediately, has no added cyanuric acid or calcium, and it will leave your pool safe, clean, and clear. And by the Bottom Feeder professional grade battery powered vacuum system. It sucks to clean pools, so cleaning pools sucks less. Get $100 off with code DVB100.
This episode is brought to you by Skimmer, the #1 pool service software in North America. With Skimmer, you can streamline your schedule, grow your revenue, and keep your customers coming back with 5-star service. Whether you're a one-person operation or an established team, Skimmer is your partner in success. Visit getskimmer.com/poolguy to try Skimmer for free for 30 days.
The Pool Guy Podcast Show. The Pool Guy Podcast Show. The Pool Guy Podcast Show.
Hi, and welcome to the Pool Guy Podcast Show. In this episode, I'm going to talk to you about pool service and the economy, and I'll focus today on what to do when you're in a down market, when it looks like a recession, and of course, it looks like we're in that time period right now where things are going down, and I'll go over some things to be aware of in a down market. Are you a pool service pro looking to take your business to the next level? Join the Pool Guy Coaching Program. Get expert advice, business tips, exclusive content, and get direct support from me. I'm a 35-year veteran in the industry. Whether you're starting out or scaling up, I've got the tools to help you succeed. Learn more at swimmingpoollearning.com. It's kind of funny how these things work, but when you're in a down market, everyone tends to pull back, of course, on your spending, on your investing, on everything, because everything is going down, and so you don't want to get in. But of course, all the experts tell you this is the best time to buy something when there's a down market. You know, you buy when it's low and you sell when it's high. You don't buy when it's high and sell when it's low. But it's one of those things where it's human nature not to want to take risk. And if everyone's saying that things are bad, you kind of buy into it and then you pull back yourself. Sometimes pulling back is logical to protect your business, and so that's why a lot of people contract even more during a down market, and it's kind of like a snowball effect. So everyone's pulling back, and therefore things go down even further. And until people start going back to the way they were, spending freely, I guess, is one thing they used to be doing, and buying stuff, of course, and upgrading. Those things all are put on the back burner for a while when everyone's kind of, I guess, a little scared and not ready to do that because they're afraid of their own financial position. So here are some things you can do to protect your business. The number one thing that you should have in place, and this is kind of Finance 101, is to have an emergency fund. I know it sounds weird and it sounds counterintuitive to have 6 months of expenses in the bank just sitting there in a savings account. Maybe you can have it in a money market account where it's earning like 4%. But you should have 6 months of expenses at easy access so that you can pay your bills if you are in a really down time. And that goes for pool service, it goes for rental investments, it goes for any kind of business. If you don't have that emergency fund and you can't pay your bills, then things really get ugly out there. And this is when things start to snowball even worse for your own financial well-being. So specifically for the pool service industry, the pool service end of it is pretty insulated from economic downturns. Now, I wouldn't say that you're entirely recession-proof. I've been through 2 big recessions so far in recent memory. I've been through the latest one in the 2000, well, actually not the latest, but one of them was in the 2008, 2009, 2010 market. There was another one right around COVID before the government started printing tons of money, giving everyone checks and, kind of stimulated the economy. There was another downturn at that point. So there have been dips like that. The biggest one, which was almost a depression, was of course the 2008, 2009, 2010 era, where it was kind of spurred on by bad mortgages. I don't know if you remember, if you were around at that time. They were giving mortgages to everyone. One of the most famous one was a cook in Las Vegas. He was working in a hotel kitchen making minimum wage, and he got like a $400,000 loan just by showing up at the bank and signing the papers, basically. That's kind of what they were doing back then. But the government did a smart thing, and they purchased all the mortgages, and then they held them. They, of course, did some short sales and took back a lot of properties, and they actually made some pretty good money on selling those mortgages back to the banking industry. And that's kind of what saved the economy. And so the government will probably step in. Same with COVID. They stepped in. They started printing money. That's why the inflation kind of went crazy, because everyone was spending like crazy, and there was a lot of money in the market that they flooded it with, causing inflation of like 15%. It was really crazy. But they did stabilize everything and save it. And I think anytime there's a down market, the government does things to keep it from completely crashing. In most cases, that's the story there. And so the pool service industry, back to that, is an insulated market, which means that you will lose some clients. There's going to be some pullback from purchasing big ticket items. They may defer some repairs. They may defer some remodeling. And some people may even cancel service. So how much should you worry about losing clients during this time period? Well, from my experience, in the biggest recession we've had, and some analysts call it a depression, really we only saw about a 10% loss of clients. Why is that? Well, there's a lot of reasons why pool service is somewhat essential. A lot of people have multiple services on their house. They have a gardener, landscaper, they have a house cleaner, they have a pool service, they have a pest control company. So when they're starting to tighten their belts, they look at things they can manage themselves. And a lot of that has to do with time. Can they do their own yard? Sometimes they can't because the yard is pretty big. Can they do their own pool? Sometimes they can because it's a pretty small and easy pool, maybe no debris. Then they can take over their pool if they have time. A lot of times they don't have time to do that, or they don't want to make the effort. Can you clean your own house? And this is one where I know a lot of house cleaners that really felt a real big cutback during the last big recession, because yes, you can live with a messy house in to some respect, and you can do a little tidying up here and there. So that is one of the first services that was cut. Pest control, well, you can live without the monthly pest control, and that's cut as well. So a lot of industries really felt cuts because they were kind of things that people can do themselves or live without at that point. But pool service falls into the same category in much respect to landscapers that maintain the yards. It's really something that the homeowner needs to dedicate time to, and it may not be worth the effort to make that cut. It's something that you have to also realize is that your clients that you service pools for, a lot of them also are insulated from recessions in their industry. So if they're teachers, sometimes the districts do cut back when you're in a recession. That happens. But these are more or less essential. And you have people in the medical field. Not too much happens there during a recession. Some people may defer some elective surgeries, and that, of course, affects the medical field. Don't get me wrong, it is a ripple effect in every industry, so they do feel it, but not to the extent that other industries may feel it, like manufacturing, or if you're a car dealer and you're trying to sell cars and no one's buying, of course you're going to feel it at that point. So a lot of your clients are also kind of insulated from that. I wouldn't say that doesn't affect them, but it's not going to affect them as much as maybe other kind of business owners. And it's area specific as well. If you're in an area where people are all, in a certain industry, that will affect it as well. But the bottom line is that you are somewhat insulated from a recession because your services are somewhat essential. I think in this particular market, it's hard for the homeowner to go back doing their own pool because everything is so expensive as well. The cost of chemicals have gone up, 200% since the last recession in 2019. And that, of course, was a very fast recovery again because the government pumped in a lot of money and everything recovered rapidly. But the inflation stuck around. And so it's really not an affordable thing to maintain your pool in some cases and to spend time doing it. And so they'll just continue with the pool service and understand that this is an expense they have to kind of budget for. Other times, of course, they can do it themselves, and that's where you'll lose about 10% of your clients. So if you have 90 pools, you're probably going to lose 9 or 10 pools during a pretty big recession because people just can't afford the service and they pull back, and they may just let their pool go a little bit and not really care about it too much. And that happens in a down market. It's logical to expect some losses in a down market. Things can't continue the same way when the market's going down. Everyone is affected by it in some way. If you do a lot of repairs as part of your service, I would suggest trying to get some more weekly service clients as soon as possible. It's a good time to advertise and bring on a few more accounts to cover the fact that you're not going to get a lot of major installation calls. If someone's heater is not working and they are thinking about a new heater, well, they're going to probably put that literally on the back burner because they're not going to want to put that amount of money in their pool at this point. Again, it's all a lot of psychological pulling back. It may not even be something that their business is affected by, but since everyone is pulling back, they're going to pull back as well. And so you are going to see a pretty big drop off in major repairs and installations. It's just very natural, and it's part of a downturn because, again, it's everyone pulling back in some way, and it affects that aspect of pool service more so than I think the service part. I remember back at that time when we had that major recession in 2008, 9, and 10, that no one would call for an acid wash and a drain. It was kind of weird, but then I figured it out. Well, no one can actually afford to do it, or no one wanted to do it at that point, and they were okay with their ugly pool because they were not ready to spend the money to do that. And you'll find things like that will happen as well. It's kind of like an elective service, basically. Yes, the pool has stains and they want to address it, but we can wait. It's not a big deal. And so that's kind of the mentality there. So those kind of outlying services will be affected. So keep that in mind. And to compensate for that, you should try to get more monthly service accounts. Now, what about your service rates? Well, I mean, sometimes it's hard to raise rates in a down market, that's for sure. You want to make sure you don't lose customers. And if you do raise rates, there's a chance of losing a certain percentage of customers over the amount that you've lost already. And so a lot of times during these down markets, it's something that you may want to just wait a little bit on and kind of feel out how things are going. If you do definitely need to raise your rates because you're not making a profit, and that does happen sometimes, and it's bad timing because maybe you should have raised your rates earlier in the year, and now you waited a little bit too long, and now we're in a recession, and people aren't going to take that nicely. But price increases are kind of built in to the way things are now. Everywhere you go, it's going to be more expensive, and so it's kind of natural to expect an increase. I mean, if you have a home, you've gotten your homeowner's insurance policy, you know that it went up by 20 or 30%, at least in California it has. Car insurance goes up every year, regardless if we're in a recession or a boom market. And so it is expected that rates will go up. And so it's not something that's unexpected. It's just probably bad timing in some cases. And you may have to suffer the consequences of losing a few accounts. But I don't think you can put a halt on raising rates if your profit margin is not there, because you do need to stay in business and you do have to do that. And to me, it's kind of worth the risk if you need to do it at that moment. As far as inflation during a recession, it kind of goes hand in hand. I think this one's a little bit different because this one has some tariffs built into it, which is going to automatically mean that things are going to be more expensive. There's just no way around it. And that's one reason why everyone is kind of pulling back, because we know that everything's going to be more expensive and it's going to affect you across the board as well. So that's also a factor. And so if you have to raise your rates because it costs you more to run your business, you're going to have to do it at some point, and regardless of the economic situation. Now, back in 2008, 9, and 10, the rates didn't go up much because there wasn't a lot of inflation at that period. There was a lot of deflation. I don't think that's going to happen. I really don't think manufacturers in the pool industry are going to significantly lower the price of their chemicals, of their pool equipment, because they really can't. The cost of labor has gone up, the cost of transportation, everything has gone up. And unless we're in a really deflationary market, the prices are going to stay about the same and probably increase because of the tariffs. Everything's going to cost more, from plastic to things that are used for manufacturing, and that's passed on to the consumer. So expect that to be part of the equation, I think, in this particular market and this time period. And so that adds another wrinkle to everything, because back in the other recessions, we didn't really have a lot of increases, except, of course, the COVID era. Right after we started emerging from it, inflation was just extremely high because of everyone wanting to buy something. And, of course, it's supply and demand kind of thing going on there. So what should you be doing? Well, I probably would, this is kind of counterintuitive because you're not helping, but I kind of would pull back on anything major. Like if you wanted to buy a new truck, maybe wait and see how many clients actually cancel service during a downtime, how much business you can generate. If you're advertising, I would say keep advertising at the same rate and see if it generates the same amount of leads or if not. And then you can make your decision based on that. If you're buying equipment in the industry, I wouldn't stop buying the equipment. If you were going to buy a vacuum system to help your business, I don't think you necessarily have to stop buying that. I'm talking more like big ticket items like a $50,000 truck. That may not be logical. You may not want to have $1,000 payment right now. And so those are things you have to consider. And it's also your whole household economic situation. If your spouse is a teacher, let's say, and the job's secure, you don't have much to worry about. But if it's not a secure environment, you definitely want to kind of follow the trend and circle the wagons at that point. It's really an individual decision, and it's kind of area specific. Like in my area, pools are really readily available. And, even last year, I tried to give several accounts to people outside of my service area. I tried to give accounts to pool guys that I know that are in my group. A lot of them couldn't take them because they were already overbooked. So in my area, it's not really a big deal because accounts are readily available. But maybe parts of Florida, Tampa or Orlando, it's a finite amount of service accounts. And as far as price cutting, I'm not sure if that's logical in a lot of businesses. You may want to introduce new tiers in your service. If you don't have a chemical-only service, if you don't have a chemical and net service, you may want to initiate some more tiered service like chemicals only or chemicals and netting to capture some customers that you may not have been looking for prior to this, because I don't think cutting rates is going to help you. I mean, it's going to hurt you more than anything because the profit margin may not even be there to begin with, or it may just be at that sweet spot, and cutting rates is going to affect you just as much as anything else happening, losing accounts. So it's kind of something you don't want to do. But introducing tiered service may be an option for you. So if you only do full service, why not do some tiered service? If you don't do individual hot tubs, you might want to market yourself and advertise for some hot tubs. They're kind of a pain, and there's a learning curve, but there are a ton of those above those fiberglass and on-deck hot tubs out there in the market. You can capture some of those, and chemical-only accounts may be something you can also boost your income with and capture clients that maybe don't want to maintain their pool to that level, but they're okay with just you having chemical-only service at this point. So I've been doing this since 1988. I have other businesses, rental properties, and the key here is not to panic. Panic causes you to make mistakes and do things really foolishly out of emotion. Look at your portfolio, look at your financial position, and do things in a logical, meticulous fashion. Turn off the news, don't watch the bad news at this point, and focus on your business and focus on what's working, and don't do anything that's going to stop what's working from working. I think that's the key. If you're advertising and still getting clients, don't stop advertising. That would be foolish. If you're, thinking that repairs are going to dry up, they may dry up in certain areas. The big ones will probably definitely dry up. So pivot a little bit and maybe get some chemical-only service accounts to compensate for the loss of the repair revenue. again, you really have to be on your feet and really have your eyes open to opportunities and to changes, and to really think things out. Don't do anything on an impulse. Don't do anything based on emotion. Do everything based on what's logical and what's working, and keep what's working. If you're looking for the podcasts that I have, you can find those on my website, swimmingpoollearning.com. If you click on the podcast icon, there'll be a drop-down menu of over 1,600 podcasts there for you. And if you're looking at my coaching program, you can find more information at poolguycoaching.com. Thanks for listening to this podcast. Have a great rest of your week, and God bless. This episode is brought to you by Hasa, providing products that deliver clean, healthy water for every aspect of everyday life. The bottom feeder battery-powered vacuum system, portable, powerful, and only weighs 12 pounds. And Skimmer. Get Skimmer, America's #1 pool service software. Podcast listeners can try Skimmer for free at getskimmer.com/poolguy.